This is an accountability video. I am in a drawdown, and these are the 3 things that I'm doing this week to get out of the hole. Let's jump right into it. I'd like to start this video reviewing my pre-market bias and how I did read the market and what I did wrong. 5 out of 5 days I lost money. I didn't make any money this week. Now 4 days out of 5 I read the market correctly. I was very frustrated on Thursday and Friday, where the majority of my drawdown was created, because I was reading the market good, but my location was so bad. I was trading off of bad locations and I was being stopped out either for a loss or for a break even, and I didn't see any follow through in my trades because my location was very bad. So let's start with one note on Monday, because here's a very important thing. I favor the longs for now. If USD starts to bounce, then short the ES. Now you can see the dollar here bouncing at 9 in the morning, and then it comes right at supply and started to go down. So seeing the dollar like this made me believe that it could continue to the upside, when the reality was that this supply was strong and I should have paid attention to it. Either wait to see what's going to happen, or wait as well to see if we break to the upside and retest. Instead of doing that, I started to short the market, and this thing was going up. Now, after I took a couple losses here, was not very impactful in my performance. Now it's Monday. I did make money the previous week, so I'm not worried about a drawdown yet. I was not aggressive trying to sell this launching point, because I was just being calm and not being very aggressive with the market, since I was reading the market wrong. Right now on Tuesday, and here's the day that I quote unquote read the market wrong, but I did have an indication that it was very important to me and I completely ignored. I did have this bull run right here, and let's see what the one note says on Tuesday. USD up after retail sales is the same supply as yesterday when equities rallied. I am writing down what my bias is. This is subconscious, but consciously I was just not believing the chart in the dollar. The market rallied after retail sales right here came to the supply, and I thought, now 1, 2, 3, 4, this is the 5th time the dollar is in this supply. I am expecting it to be blown. Instead of just waiting for it to go above, I just simply was engaging here when the dollar was retracing, right? I was trying to short the equity markets when the dollar was retracing down. You can see here the market just rallied. Now you tell me, and this is very, that's why I consider this so difficult, because you need to have criteria when to apply it, when not to apply it. It's not a complete art, it's not a complete science. More like we need to develop this sort of intuition, right? But guess what? I didn't have to have intuition not to take this short, even though I took them. And these words are very important for myself, because just making this video is making me realize so many things about my trading. If you see here, you can notice that the advanced decline is not normal. It's not normal behavior on the advanced decline. It's not a normal behavior going from minus 1800 to plus 700 in 1 hour. So if you study the internals, the advanced decline does not go, this does not behave this way every day. Matter of fact, this is a very atypical behavior. So the market was screaming along, and despite that signal here on the advanced decline, I was shorting right here, and I took 2 losses. Not a big deal. What matters to me is that I did have the dollar coming down, right? And I thought I could long the dollar here, meaning short the equity markets, when the real area was down here. So that's Tuesday. On Wednesday, let's review my one note. Bias is neutral bearish, so I am inclined more to bearish side, and I do have this supply. Now this supply is from the previous week. Now if I include the 2 previous days, now I have same COT, right? Same area. And I do have now a launching point because we're gapping down. Okay. Now it's a very sideways week. We've been ranging here for 7 days. I'm not thinking this thing is gonna go to 4,000, right, from this area. I just want to get to this area and execute off of it. So instead of that, what I did is and I'll show you, is this. The market opened and I start to short immediately instead of just waiting patiently for my supply. I got 2 break-evens right here. And this is this area. This is this area. Let's go down in time frame. Let's go down on 5 minutes. So this is this area. Now, I want to point out so many things that I did wrong here. The previous day, I did have patience. I did have the patience to wait for this trade to develop. And I took it. I took 2 shorts here in this 5 minutes sideways. And then the market continued. The next day, I'm not patient enough. I'm just finding myself trading in this sideways, in this chop. Now, since I took 2 break-evens here, I am not waiting for this trade. I'm just watching this massive 13.5 minute candle going into my supply, right? So it's so important to keep your clarity, your perspective about the market, because you can see this 13 point massive candle to the upside, right? Going into supply. Now I think, ooh, this thing can repeat yesterday. And I think the majority of traders thought that we were going to have a repeat from the previous day, because you have this massive candle breaking up the sideways of 5 minute here into supply. But here's where I come and I want to show you the advanced decline. So look at the atypical movement on the advanced decline on Tuesday. Now look at Wednesday. Wednesday is more like a typical advanced decline behavior. Look at this. Came down, came up, very sideways. You have no momentum here. You have no aggressive buying or selling, if you tell me, right? Now, after 10:24, obviously this happens. We hit the supply. Sellers come in and you have this massive selling candle. Now, my trades came right here, right? So I came here, I added on, I was up a little, and then I bailed out the trade break even. I was not aggressive enough to keep it longer. Now, I understand that since I took this trade so late, that's why I say location is going to be my main focus this week. But since I took this trade late, I am aggressive moving my stop because I know a turnaround can happen at any time. I bailed out break even here. Now I'm right with the direction, I right with the area, but I'm not making money, right? Out of these trading day Wednesday, I learned a lot because there are 2 things. Number 1, location obviously is the 4th time I say it in this video. I think the more I say it, the more my subconscious mind will pick it up and more attention I will pay to location. Also, I want to have some sort of signal from the footprint. The footprint is so valuable. So you can have something like this candle. Look at this candle from -200 to +500 when you have a down trade on the short term, right? And sellers or buyers come in very aggressively, right? For instance, you have something like this. That's where you want to find a sequence of events in the footprint. You have a very bullish candle signaling a little bit of exhaustion. Volume is higher than normal. Now you have this one. Here you have 4,000, 7,000, 7,000, 7,000. Now you have a 12,000 contracts volume bar. And then you have a delta of a roughly 2,000, right? Positive 2,000. You have a massive candle to the upside. Now you're reaching supply here. And what happens is that you have this massive candle that in this one you have no signal. In this one you have no signal other than the volume in this candle, which signals exhaustion. Here in this one you have a positive 400 delta, and then suddenly you have a -800 delta. Massive candle here. This is a very good signal to short, and these type of signals, they come up. They are showing up frequently in the ES. It's something that I need to pay attention to more often, right? And you see here after this candle, the move down is massive. Also, on the opposite side, you start seeing the same setup. Look, the same day, like 30 minutes apart, you have a massive selling candle. You have massive selling right here, a lot of volume here, and then you have this candle, massive volume, 14, 15,000, and the delta was -400 at some point, and the candle ended up positive 900. This tells you that sellers are not strong enough here. Like, a lot of people are selling here, but there's no follow through in the market. And then you have this small correction to the upside. So this type of signals in the footprint chart is very, very important. On Thursday, I had bias for today is neutral. I'm open to any direction. If DXY continues to the downside, I'll be long bias. If USD stop and start bouncing, I'll continue my short bias from yesterday, meaning previous day. The dollar just stayed right after the open sideways here. Dollar stayed sideways. My bias was going to be short, and this is Thursday. The market went sideways, up, down, and ultimately it dropped after a Powell spoke. Let's go see Friday. So Friday is right here. If the USD needs to stay flat or go up, same for rates, for the short bias on the ES. If USD breaks to the downside and gain momentum, I'll have my bias shift to the long side. And that never came. You see the dollar hit on Friday. This is the market open right here, and the dollar stayed sideways, never broke below this demand. Where was my signal to change to the long bias? Now, you can see here the market clearly opened up and went down. I want to show you where my trades were on Friday. I think I had the right direction. Look at this. I shorted here, stepped out right here, then shorted again. Add here, stepped out break even, and 3 more minutes. Boom, it went down. Now, then I took a long here because I had a demand, but it was more like a tilted trade right here. A small risk, and look, the market turned around partially right after I took this. Now, it never bounced because the bias for the day was short, but there are a few things I'm gonna do now. Let's get very serious into what am I going to do on this next week. Number one, I will pick location and patiently wait for it to be in play. So here comes COTs, extremes of the range, launching points, etc. Number two, I'm very deep into add-ons after I did a position sizing video, and my add-ons are not bad. I'm adding on in average after 3 or 4 points when the trade goes in my direction. But what I'm doing wrong is because I have a fear of losing, I'm not increasing my risk. So what the book says and all the analysis that I've made is that when the market is in your direction, one needs to increase the risk, not reduce it, not bring the stop break even, increase your risk, because the market already proved that is agreeing with your perspective, with your direction, and you need to increase your risk. What I'm talking about is simply this. For instance, if I enter here and I ended up here, right, my average will be somewhere around, and I'll show this better here. So look at this. I got out of break even here. So my average entry came from here to here because I got break even here, right? So what if, and this has happened to me this week at least 3 times. And remember, I don't need to take 5 trades to be profitable. I am down roughly $150 times 20 is $3,000 for the week. With 1 trade, I can recoup $2,000. Okay, just 1 trade. So what I'm referring to is just, instead of bringing my stop break even and reducing my risk, I want to play with the chart and be honest, be thoughtful that this pivot is a invalidation point. If the market goes above this pivot, it might not respect this selling area, which is the closing the gap. It might go to this area right here, and now the risk becomes seriously too big for my trading idea, right? But I need to be more realistic and think that this pivot needs to hold for my trade to work. But my trading idea is not invalidated, and I got out of the trade. Why? Because I had fear of losing. And then right after, it went in my direction. So what I'm going to do my effort this week is, even my average is lower, or meaning my average is worse, I'm going to try to risk the same invalidation point, but not right here. I need to give it a wiggle room, right? VIX is going up, ATR is going up, volatility is going up. I need to increase my risk when I have the right trading idea. Third thing I am doing, pay close attention to advanced decline when has conviction. Pay close attention to advanced decline when it has conviction. Why is this? The example from Tuesday. I was shorting the market in supply, location was okay, but the environment was not the right one. The environment was completely opposite. Very aggressive buying was happening in the market, and instead I was shorting the market. That doesn't happen to me very often, and I am very grateful that happened to me, because now I have a focus on that. When before I was more like oblivious or was not paying enough attention to what the advanced decline was doing. With that, I conclude this video. I hope you liked it. If you have value out of the channel, please consider subscribing and give us a thumbs up if you like the video, so we can grow the channel and reach more traders. Thank you. I'll see you in the next one. Bye.